Thank you so much, Lynn. So we're going to hand over now to Preston. Preston is going to take us on a very interesting journey through Bitcoin, including going over the recent presentation that Michael Saylor made to Microsoft, which is a very fascinating video. We'll see it. You'll learn all about it. You'll understand it all after this. Very excited. Thank you very much. Actually, one more thing. And we'll have a break after Preston's presentation.
All right, so I stand between you and the break. Okay, right there. Okay, thank you. The decompression of Bitcoin. So, how many people were familiar with Michael Saylor giving the talk to Microsoft recently? He gave a 3-minute presentation to Microsoft. Microsoft had a vote on whether they were going to incorporate Bitcoin as a treasury asset. The shareholders requested this. Michael was asked to give a presentation, and Microsoft gave Michael Saylor 3 minutes to give the presentation on Bitcoin, and it was a whopper. So I'm going to start off with, I was reading this book here, The User Illusion, which is talking about intelligence, and all this AI stuff just has me kind of fascinated at the moment. And it's talking about, I gave this example of the shortest communication according to the Guinness Book of World Records, and it was Victor Hugo, who was the author of Les Mis and also the author of Hunchback at Notre Dame. And he sends a letter to his publisher in 1862, and this was right after he finished writing Les Mis. And he went on a holiday. And he writes this letter to his publisher to see how the sales were doing. This was the letter. It was a question mark, and that was it. So his publisher got this. I would imagine, being in the publisher's shoes, you get this brilliant author, and you're expecting, just a brilliantly constructed letter, but no, you get a question mark. And so, how do you think his publisher responded back to him? This is how he responded back to him. It was an exclamation point. And in that communication, tons was communicated. An endless array of possibilities were communicated. And so the transmission of knowledge is dependent on not only the sender, but also the receiver in the context in which it is. That communication that I just showed you was about 10 bits that was transmitted. And it's not the number of bits. Again, it's the context. The conditioning of the receiver's past was vital to understanding the context of the message that was sent. If you're the publisher and you get some random message from a person you don't know and it's just a question mark, you're going to open that up and you're going to say, well, this is pretty much worthless, and you're going to throw it in the trash. But because he knew who it was from, and he knew that they had this relationship of something that they just worked aggressively on, which was the manuscript for Les Mis, there was context, there was understanding, and then the response back, which was equally hilarious, the exclamation point was, well, sales are going well, my friend. And you can read into that in any way that you want. So my message here is, how does this apply to Bitcoin? So Bitcoin's message is very clear, but the world's past experience and conditioning of what it is why so many are confused, in my humble opinion. Other crypto coins not backed by real energy, you just heard Ross literally say this on stage, only makes this message more confusing. It's almost like there was no sender on the letter. So there's a lot of confusion that's happening on this particular topic. Bitcoin is a technology that solves an enormous problem that most people in the world don't even understand exists, and that's what's so really strange about all of this. The solution has already been built. It's already out there. The problem is people don't understand the problem in the context of what in the world it's trying to solve. And you just heard an amazing, layout from Lynn Alden on what is this thing from a macro standpoint and all these other things that are going on. Could you imagine the amount of work and energy and focus that Lynn put in it to understand the problem on the receiver side of it? And just as an example, okay, so what happens when global currency has no peg? And we talked through that with the petrodollar system was a way that was constructed. But what you're actually seeing is a competition to debase between nation states occurs. And I want to provide an example that I think everybody in the room can kind of understand as to what I mean by a competition to debase. So imagine everybody's familiar with the game Monopoly. Show of hands, I'm sure. Yep, everybody's familiar with Monopoly. Imagine just 4 people sitting at a table, and they're playing the game of Monopoly. And if we want to speed this game up, the fastest way to do that is instead of collecting 200 every time you go around go, let's just add 500 or 1,000. And what you're going to find is the game speeds up very quickly, because what you're getting is the polarization of the scarce assets, which are the park places and you name it around the board, right? That's the equity on the board. And as the printing and the fiat is entering the game, everybody is incentivized to own as much of that property as they can, because then it kicks off free cash flows. And let's say I'm starting to dominate the game and the person sitting to my right is trying to catch up, and I just passed go again and I got the next wave of 1,000 fiat units added into the game. My incentive is to immediately try to go buy other properties if they've already been scooped up by somebody else in the game, or to go into the game and buy that scarce equity. That's how I win the game. But I'm going to put a twist on this, okay? Let's imagine we have those 4 people playing right here on one card table. And then over here, we have a second group of people that are also playing a game of Monopoly, okay? And they're playing the same game, but here's the twist. There's a 5th person that's playing the banker, and they're the ones that are inserting the fiat into the game here, and then you have another banker over there that's inserting the fiat into that game. And the players at the table look over at the banker and they say, you know, if you just push a little bit more money into the game, and sorry, one more rule here that sets up this example is the players on this table can come over to this table and they can buy the equity on this table. And the players on this table can come over to this table and buy the equity at this table, okay? So now imagine the relationship and the desire and the incentive that the players at this table have to whisper over to their banker, hey, if you just give us a little bit more of that fiat, we can go over there and we can extract the scarce desirable resources off that table, and we can dominate the global scenario that I'm explaining. If there's no peg that forces the monetary units at this table to be fixed and the monetary units at this table to be fixed, you can see very quickly how the incentives blow out of proportion, and it's all about owning the scarce desirable resources that are on that table. This is the race to the base. Imagine if one of these people sitting at these tables said, you know what, we're not going to cheat. We're not going to put more fiat units into our game. We're going to play by the rules, and ours are going to be, you know, standardized at whatever many units. But now we're not dealing with 2 tables. We're dealing with 20 tables of people playing this game. And they're all breaking the rules. Who's going to end up with the scarce desirable resources if you're the one table that's playing by the rules and everybody else isn't? So what you get yourself into is a game theory where people are incentivized to print as much as they can, extract the natural resources of not only their local area, but the other boards. And you can see how it becomes a race to the base. So here's the question. What if a fair money outside of government control could exist that no government entity could control? And those 20 people playing this, the 20 different tables are forced to play by a fixed monetary standard with fixed supply of units, call them 21 million units, which is how many Bitcoin exist. And Ross and I didn't have this conversation before. He literally he said this quote, and I was like, yes, because I knew my presentation was coming up, and I have it right here. And this is from Friedrich Hayek. In 1984, he said this. I don't believe we shall ever have good money again before we take the thing out of the hands of the government. That is, we can't take them violently out of the hands of the government. All we can do is by some sly, roundabout way, introduce something that they can't stop. And this is the benefit for citizens worldwide, not citizens in in one domestic location with what he's talking about. And this is the question: what if fair money outside of government control could exist? We believe at Ego Death Capital and Alex with Time Chain that this is what's playing out right now, is that you have a fair money that nobody, no outside person can control. It's backed by energy consumption, and we think this is really important. So Michael goes and gives this presentation to the Microsoft shareholders, going back to the situation that I initially started off with. You can have the most brilliant communication on the send side, but if on the receive side, the person hasn't done the energy or understand the context of what you're saying, it's just straight over your head. And so Michael had 3 minutes. He gave a presentation. I've extracted a couple of the slides out of his presentation that I want to talk to that I think are important. And then we're going to play Michael's 3-minute presentation that he gave to Microsoft, just so you guys can kind of see it. So this was an overview of his presentation. He positioned Bitcoin as this critical component of the next technology wave. For people that aren't intimately familiar with Michael, he predicted the mobile wave, wrote an entire book about it, and he seems to have this innate ability to kind of see technology trends as they're emerging and well before they really kind of start taking hold. He proposed that Microsoft, similar to what you just heard Ross say that they've been doing at NYDIG, since 2017, as far as taking their free cash flows and plowing them into Bitcoin and keeping them on their balance sheet. Michael proposed that to Microsoft. He got into the nuance of like how much value he think that it could provide through shareholders with $5 trillion in their market cap over the next decade was his projection, and he was pushing them to invest the number that you guys see there on the screen. So let's talk about Michael's performance. In 2020, he had a company, it makes about 75 to 100 million, we're not talking billions, only 75 to 100 million annualized in net income, so he's profitable. And he was looking at, he had a treasury of about $500 million of liquid assets on his balance sheet at that time in 2020, whenever he decided to adopt the Bitcoin strategy with any type of retained earnings that he had, and he took the 500 million that he already had, and he invested it in Bitcoin. Since that time in 2020, and this is the slide from his presentation, this is his performance, MSTR is MicroStrategy. This is the performance that he's had in the stock compared to other leaders in the stock market. NVIDIA, right there, you can see NVIDIA's done really well. Tesla, and you look at the what is it that NVIDIA is making, and you look at the technology behind all that and how insanely impressive all of it is, and you look at their stock performance, which is impressive, and then you look at MicroStrategy. He hasn't changed the product. He hasn't changed anything other than taking a Bitcoin treasury strategy, and this is the performance, which I think is extremely noteworthy. Doesn't mean it's going to be what it is moving forward, but I think it's very characteristic of what we've seen in the last 4 years. Then he shows just Bitcoin itself, the annualized performance since he has started using it as a treasury reserve asset. And I think it's noteworthy. We had a lot of discussion about fixed income, what role fixed income is going to have with this potential change and shift that's happening from a macro landscape and potentially a long-term trend. You can see the bonds performance for the last 4 years. So what is fundamentally enabling this for him to get this type of performance? He makes the argument that these are some of the big giant trends that have happened in the past. And his opinion is that digital capital is going to be a massive technology wave moving forward. I love this. This is from a friend, Jesse Myers, that Michael used in his presentation. And what he's doing, he's just saying, all right, let's just talk about the global perspective of all major asset classes. You can see bonds, 300 trillion. And I also want to point out here at the top there, the total global asset value is 900 trillion for everything in the world. Bonds make up 1/3 of that at 300 trillion. Real estate, 330 trillion. Equities, 115 trillion. You can see gold, you can see art, cars, and collectibles. The money, just the base fiat money that's out there, 120 trillion across the globe. And then you can see Bitcoin there in the far left, 2 trillion. Very small. And what Michael's suggesting is that these assets provide utility and preserve capital, but he thinks that the shift is going to take that 900 trillion in today's buying power, and that half of it is going to be used as long-term capital. You often hear, if you listen to a podcast or you listen to him just talking, that he said people are using real estate as a way to preserve their wealth. He's like, you go out to the Hamptons, the person might have 5 homes. The reason they have 5 homes is because they're actually just wanting to preserve the buying power of the profits and the retained earnings that they have. Is it nice that they can go to the Hamptons and stay at the? Of course it is. But it's also a way to not just freeze it, but potentially keep up with the inflation because it's scarce and desirable, and everybody's going to want to always have a house in the Hamptons. And he uses this as an example of why has prices in real estate been bid so high. Is it because of the utility of it, or is it because of the store value qualities of it? And he would make the argument that it's because of the store value qualities, much more so than the utility. And so he thinks over the coming 2 decades that this division of that 900 trillion that we saw is going 450 trillion of it is for store value, 450 of it approximately for utility purposes. So why is digital capital so important in his opinion moving forward? And he's saying, if you own the house in the Hamptons, you have this this thing that's chipping away at it, almost like if you were an aircraft, there's drag. You can't have lift without also having drag that's associated with it. And he's saying when you own the house in the Hamptons or you own these other things that are being used as store of value things, they come with all of these risk factors. And there's a lot there. But with Bitcoin, he's saying you don't have any of these risk factors. And so that drag that's associated with those store value properties, you relinquish it. It's almost like you're able to have the lift with near perfect zero drag associated with it because it's digital. This is where Bitcoin's currently at. He says 7th largest asset. It's the fastest growing. It's the most popular. When you look at the speed of the internet itself, the internet protocol and the adoption of it, and you look at the adoption of people that are coming to Bitcoin, it's actually faster than the internet itself over the past decade. He continues to go on. This is another, side by side showing you the issues with traditional forms of store of value and all that friction and all of that drag that's associated with it versus Bitcoin. He likes to do this thing called a half-life, where he's looking at a traditional store of value and he's saying, after 70 years, the underlying value, let's say I took $1 million worth of buying power today and I plugged it into gold. Well, after 70 to 80 years, I've pretty much consumed through the drag that same amount that I initially put into it. And he has obvious calculations that he's using to put them on this timeline. But what he's also showing is that Bitcoin is far beyond anything that exists that we're using for store of value properties today. He's saying, how is Bitcoin secured? And you heard Ross and Lynn both hit on this. It's stored not just by energy. And this is another misnomer that I think a lot of people that are new to the space misunderstand. It's not just the energy. It's the encrypted energy. You have to have a mining rig that takes the energy and is trying to figure out the block. That encrypted energy is what really makes it different. Because let's say a nation state wants to come online and say, we want to control the Bitcoin. Well, they have to figure out the supply chain of all the mining rigs, and all of that is so decentralized across the globe. You have mining happening in China. You have it happening in Russia. You have it happening in the United States. In fact, you have it happening in style in the United States, which I'm very excited and proud of as an American. But it's the encrypted energy that is causing Bitcoin to be secure, that no one entity can come in there and change it. 20 gigawatts. Anybody have a guess as to how many gigawatts power New York City for a year? It's about 5 to 6, just to kind of give you an idea of how impressive this is as far as the security of Bitcoin. Michael makes the argument we're at a really critical time right now from a political standpoint. Everybody's been concerned about regulatory guidance, the lack of the ambiguity over regulatory guidance. And it seems that, and this is his slide, that things are about to change. And I'm very political agnostic, but it seems like it's going to be extremely exciting for this space to navigate moving forward. Not only that, you have BlackRock. Everybody knows who BlackRock is. Going on TV, CNBC, Larry Fink, all the time. It almost feels weekly. This is a Bloomberg article. It's what? The date's not on there. This is within the last 2 weeks, this article. BlackRock says 2% Bitcoin allocation is a reasonable range. These are the things that are being said by the largest banks on the planet. This was, Michael's pitch to the Microsoft board saying, hey, instead of giving out the dividends, instead of surrendering, that's the word he uses there, instead of surrendering your dividends back to your shareholders and doing buybacks, which is the same thing as a dividend but has better tax implications, and take your free cash flows, take all these things and plow it into Bitcoin, he thinks that you can have way better performance for those shareholders than just surrendering it. Now, back to this slide. If you look, this is a little bit different than the one that I showed you earlier that had a total 900 trillion units in it. This one has 4,000 trillion units in it. Okay? And what he's saying is in 21 years from now, this is his opinion, and he built a model that he released on GitHub for people to go in there and tinker with whatever assumptions they want. This is how he thinks the world is going to look from a construction standpoint. He thinks that their real estate, and what's really interesting is if you take the previous one and you turn that into 4,000 trillion units, you're 4.4xing it. Okay, the amount of monetary units from a fiat standpoint that are in the system. He thinks that this is going to be the construction and the composition of what all these asset classes look like after you 4.4x it. Where did he get the 4.4x over 21 years? Very interestingly, you heard Ross talk about how the money supply is growing at 7 to 8%. So when you take the 900 trillion units, and it was interesting, this was my assumption of how Michael did this. He didn't talk about it in his presentation, but I went into Excel and I just did a 21-year compound annual growth rate off of the 900 trillion, and I used 8% because I've heard this talking point from Lynn and many others as to that's being the real debasement rate is around 8%, and sure enough, it gave me 4,000 trillion. So it's pretty neat that that's how Michael is also doing these assumptions, which is he thinks the money supply of fiat is growing at about 8% compounded annually. So I took the chart that he had for today. I looked at where the chart was in 2046, 21 years later. And you can see there at the top right here that the total number of units going from 900 trillion to 4,000 is a 4.4x multiple. So if any one of these are above 4.4, that is an industry or a sector that we can expect to be somewhat of a tailwind from an investment standpoint. If it's something that's compressing and it's below the 4.4, gold, bonds, were the only two, according to Michael's, modeling, that's a headwind from an investment standpoint. And, we're a Bitcoin fund, so of course I want to highlight this bottom one. We, according to Michael's model, he thinks that that's 140x growth as to how much, buying power is going to be coming to Bitcoin. And again, this is the baseline. So if it's above or below that, that's where you're going. So going back to the Bill Miller quote that I had the pleasure of interviewing him, find something that has a long-term trend that has a tailwind for you, using a sailing metaphor, and then find the best companies, the best builders, and the people that are in that space, because that's what's going to give you incredible investment returns. This is the so what. This is my last slide. Most people arrive at Bitcoin without ever understanding the problem that it's deeply solving. Going back to the letter. The receiver doesn't have the context. In Bitcoin, we have a saying that until you put in your 100 hours of studying, you're going to continue to struggle to really understand what problem it's solving. They will say that it solves for inflation and debasement, and it does. But what I think most people don't understand is that the global fixed income market, and thus, and this is the key point, the global cost of capital has been grossly stretched to its limits. And if you can control the cost of capital, that's effectively price controls on everything. And I think everybody would agree, price controls are a bad thing. We like free and open markets. During this transition, I think that most will continue to misunderstand the context of the much bigger problem that's being solved here. And this is why there's so much confusion around Bitcoin versus crypto, Bitcoin versus central bank digital currencies, Bitcoin versus traditional currencies, and why Bitcoin has continued to outperform over the past decade traditional investments. We expect that trend to continue. So this is the video. Do I just push the button for it? We'll find out.
Microsoft can't afford to miss the next technology wave, and Bitcoin is that wave. Bitcoin represents the greatest digital transformation of the 21st century. It represents digital capital. The global wealth is distributed across assets that provide utility and others that preserve capital. But risk is destroying trillions of dollars of that capital every single year. And investors are turning to digital capital in the form of Bitcoin in order to avoid that risk. Digital capital is economically and technically superior to physical capital, and it represents a revolutionary advance in capital preservation. The asset class itself is growing from trillions to hundreds of trillions of dollars, and it is backed by digital power along with political and economic power. It makes sense for Microsoft to be powered by digital capital. Bitcoin's the best asset you can own. The numbers speak for themselves. It makes a lot more sense to buy Bitcoin than to buy your own stock back or to hold Bitcoin rather than holding bonds. If you're going to outperform, you're going to need Bitcoin. And those bonds are undermining your options market and your equity liquidity. Luckily, you have an alternative. Public support for Bitcoin is surging, as is political support, as is support for the US Bitcoin Strategic Reserve, as is Wall Street support. And the President of the United States says,
never sell your Bitcoin.
That's why we're entering year one of the crypto renaissance. And you have a choice to make. Cling to the past or embrace the future. Divest billions of dollars and slow your growth rate. Invest billions of dollars and accelerate your growth rate. You've surrendered hundreds of billions of dollars of capital over the past 5 years, and you've just amplified the risks that your own shareholders face. If you want to escape that vicious cycle, you're going to need an asset without counterparty risk. What if you could buy a $100 billion company growing faster than Microsoft for 1 times revenue? What if you could keep doing it every single year? It's time for Microsoft to evaluate its Bitcoin strategic options. We've created an open source model. You can plug in your own assumptions. You can convert your cash flows and your dividends and your buybacks and your debt into Bitcoin. If you do that, you'll add hundreds of dollars to the stock price. You can create trillions of dollars of enterprise value. You can strip away risk from your shareholders, and you can prosper on the Bitcoin standard. So do the right thing for the world and adopt Bitcoin.
Lots of compression there, right? When I saw this, I'm saying 3 minutes of just deep, insane compression to a receiver that doesn't understand the context, probably. I mean, based on the vote, they didn't understand the context, in my humble opinion. And I think the rest of the world is in a very similar situation. So that was my presentation, decompressing Bitcoin.